Why do banks suddenly freeze accounts?
Banks typically freeze accounts to prevent fraud, comply with regulatory requirements, or investigate suspicious activities. While these actions are often necessary to protect the financial system, they can sometimes be executed without adequate notice to account holders, leading to unintended hardships.
What are the immediate impacts on individuals when their accounts are suddenly frozen?
When an account is frozen without warning, individuals lose access to their funds, which can prevent them from paying bills, purchasing essentials, or accessing their savings. This can cause financial distress, especially for those who rely on their bank accounts for daily transactions and living expenses.
How does sudden account freezing affect public trust in the banking system?
Sudden account freezes can lead to a significant loss of trust in the banking system. People may fear that their money isn't safe, which can result in a preference for cash transactions or the use of informal financial services. This distrust can undermine the efforts to transition to a cashless, digital economy.
What are the potential risks to the digital economy if account freezes become common?
If account freezes become common, they could slow down the adoption of digital banking and payment systems. People might hesitate to embrace digital transactions, fearing that their accounts could be frozen without warning. This could hinder the growth of India's digital economy, which relies on public confidence in digital financial systems.
What challenges do banks face when they freeze accounts?
Banks face several challenges, including reputational risks, managing customer grievances, and balancing regulatory compliance with customer service. Freezing accounts can lead to a loss of customer trust and loyalty, operational strain in dealing with unfreezing requests, and potential legal repercussions if freezes are found to be unjustified.
What legal recourse do individuals have if their accounts are wrongfully frozen?
Individuals can seek legal recourse by filing complaints with banking ombudsman, approaching consumer courts, or seeking judicial intervention. However, the process can be time-consuming and complex, which is why there is a need for legal reforms to make it easier for affected individuals to challenge wrongful freezes.
How can banks and authorities improve the process of account freezing to minimize negative impacts?
Banks and authorities can improve the process by ensuring transparency, such as informing customers about potential freezes and the reasons behind them. They should also streamline the process for unfreezing accounts, provide quicker resolution for disputes, and ensure that anti-fraud measures are balanced with the need to maintain public trust.
What steps can the general public take to protect themselves from sudden account freezes?
The general public can protect themselves by staying informed about their rights as bank customers, regularly monitoring their accounts for any unusual activity, and maintaining multiple sources of funds if possible. They should also be aware of the procedures to follow if their account is frozen and advocate for more transparent banking practices.
What role can legal authorities play in ensuring that account freezes are fair and justified?
Legal authorities can ensure that account freezes are fair and justified by implementing clear regulations that protect consumers, providing oversight to prevent misuse of freezing powers, and making legal recourse more accessible and efficient for affected individuals. Legislative reforms may also be necessary to safeguard the rights of account holders.
What is the long-term solution to prevent the negative impacts of sudden account freezes?
The long-term solution involves a collaborative approach between banks, regulatory authorities, and legal bodies to create a more transparent, fair, and efficient system. This includes clear communication with customers, streamlined procedures for handling account freezes, and legal safeguards to protect individuals' rights, all while maintaining the security and integrity of the financial system.